The Bitcoin price has been hovering around $100,000 for quite a while. The question is, where are we going from here? Are we going to go another step up, or will people now take profit, and are we bleeding from here? Let's have a look at all of those charts here behind me. Let's have a look at the on-chain data most people are not considering. And let's start with this chart here. This comes from the Glassnode Insights newsletter, and it shows the net realized profit and loss. And in the middle of March of last year, we have seen quite a lot of profit taking. This was when Bitcoin was at around 70K. We then took a breather for several months, and then we had our nice move to 100K, where again, we've seen quite a bit of profit taking. But that profit taking has now very much slowed down. Now, when the long-term holders are taking profit, that's usually a sign that the rally is slowing down. And this usually happens when we hit new all-time highs. Since the selling pressure is coming down, a little bit of new demand can push up the prices again. Now, there are several indicators that can show us the long-term holder behavior. For example, over here, we've got the long-term holder spending binary indicator. And again, this peaked in the middle of March 2024 when Bitcoin was at 70K, and it also peaked when Bitcoin hit the 100K. When the long-term holders aren't spending at all, this tends to be the time when we bottom out. Unfortunately, we aren't there yet, but it is trending in the right direction. Here's the binary coin days destroyed metric, again peaking at very similar times. And what are destroyed coin days? It's simply a metric of the Bitcoin that usually do not move. So let's say you're a whale, you accumulated a lot of Bitcoin, and then you don't touch that Bitcoin until Bitcoin hits new all-time highs, right? At those higher prices, you then decide to maybe rebalance your portfolio to sell off some of the Bitcoin. When you have 100 Bitcoin and you haven't moved them for 1,000 days, and now after 1,000 days, when Bitcoin hits the new all-time highs, you're deciding actually to move the Bitcoin, maybe to send it to centralized exchanges to sell it off. Then you're destroying 100,000 coin days. So the more Bitcoin you have and the longer you hold those Bitcoin for, the more potentially you can destroy coin days. So the higher the coin days destroyed goes, the more we can see that the long-term holders are selling off. And so there's this binary coin days destroyed metric, but there's also a more fluid version of the same thing. This is not a step function, but a moving average of 30 days, and it turns red whenever the long-term holders are massively selling. And again, we've got strong selling when Bitcoin was here at 40K. So that was in 2021. Then subsequently, very strong selling at 72K. And the recent selling at 100K wasn't as pronounced, relatively speaking. But again, the long-term holders currently are not selling. This tends to rather go down in the last weeks. Now, here's what's interesting. Whenever the long-term holders sell, right, whenever those whales want to offload, they tend to move their assets to the centralized exchanges. So have a look at the exchange inflow breakdown by cohort. So we've got the short-term holders in red and the long-term holders in blue, and all of the transfers in orange. And whenever the transfers to the exchanges is elevated, that's when those whales tend to take profit. In other words, we want to buy when this indicator is very low. Currently, it's rather on the lower side. The market is clearly cooling off. The selling pressure especially is cooling off. And so whenever those transfers to the centralized exchanges happen, we also see how the retail investors start buying. So it's the long-term whales that offload and the small retail investors that buy. So there's a reason why the rich people have so much money and why the poor people don't. Right? The poor people on average tend to not make that great of a call compared to the whales. So you want to do the opposite of what retail tends to do. You want to sell when retail tends to buy, and you want to buy when retail tends to sell. Now, why am I discussing the long-term holder behavior that much? I believe that's because that's what's driving the prices. I don't think that it's the Bitcoin ETF that's moving the prices. I think it's the behavior by the long-term holders that make most of the difference. Have a look at this comparison of the Bitcoin ETF flows and the long-term holder flows. So the Bitcoin ETF flows, or in other words, the demand by traditional finance by Wall Street, that's in green. And what we see in blue is what the long-term holders are doing. Isn't it interesting how Wall Street tends to also buy with retail? They tend to buy high and do not much when the price is low. And the long-term holders do the exact opposite, right? They sell high and they buy low. You want to buy together with the long-term holders, and you want to sell together with the long-term holders. Currently, the selling pressure by those long-term holders is subsiding. And let's see what they're going to do in the next few weeks. Once we see strong demand by the long-term holders, I will of course also make a video about this. So feel free to subscribe, right? I publish videos on Bitcoin and also on various altcoins regularly over here on this channel. Now, the Bitcoin market as a whole is comparatively calm right now. The volatility is quite low. And historically what happened is when we had that low volatility that we got a breakout in either direction. So have a look at this. This looks at the 60-day volatility. So that's the area here in gray. And the current volatility is this line here in red. What's indicated by those vertical areas, right, by this orange vertical lines, that's the point in time when the volatility was lower than it is right now. And so what do we see? We see whenever volatility is that low that we tend to see an outbreak. So over here, this was to the top. Over here, this was to the top. Over here, this was a crash. Then let's continue further. Another outbreak to the upside. One more to the upside. Nothing happened here. And again to the upside. So most of the time, when there is very little volatility, we tend to break out to the top. It doesn't happen always, but it happens most of the time. And it appears as if the same is true yet again. Have a look at the short-term holder sell-side risk ratio. Whenever this is high, we should rather tend to sell. Whenever this is low, we should rather tend to buy. And we are again comparatively low. So I think the most likely scenario from here is that we're going to go sideways for a bit longer. And then at some point when the short-term holders continue to buy more and the long-term holders have stopped all of their selling, then we will see the breakout to the top. Now here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long-term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum and thus the altcoin market is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics. The supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcoinstrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.